join us today. My name is Matthew Wan, and I'm the manager of the Program and Funding Administration team. Well, if you stepped outside today for lunch, you'll know that it doesn't feel like spring, but I assure you it is. And as we're just moving into this season, it does kind of feel like a very natural transition point, giving us that opportunity to wrap up and reflect upon some of the work that's behind us, 2025, but also look forward, hopefully, to the rest of the year and what is ahead. So I'd like to just remind everyone as we are getting started with today's teleconference that our topic is to support you with your 2025 CWELCC reconciliation. And so I promise I'll try my best to give everyone some good news as we're heading into the long weekend starting tomorrow. And with that, we will dive right into our brief housekeeping items. So please note that as usual, today's session is being recorded. So by staying on this call, you are consenting to this recording. Once the recording is available, we'll be sure to share the link and slide materials for you and your team to be able to review. I'd also like to ask that during the teleconference, you please keep your microphones muted and cameras off. That's just to help us to minimize some distractions. And during this Q&A segment at the end of our time together, if you'd like to come off mute to ask your question verbally, please just raise your virtual hand and our moderator will call upon you when it's time to ask your question. If for whatever reason we're not able to get to your question on the call today, we do encourage you to please reach out to one of your wonderful early years specialists. Moving on to the next slide, as a refresher, we do use the Q&A feature in Microsoft Teams during our teleconferences, and this is really just so that we can address as many questions as possible while also keeping the conversation focused. So on this slide, you'll see the Q&A icon, and this is where you can click on your screen to open the Q&A window. If you do have a question, simply type it at any time into the Ask a Question box and click Ask. You will also have the opportunity to upvote a question if it seems particularly relevant. So this just helps us to prioritize the most common or urgent inquiries as we move through the session. Regardless of how it is that you choose to ask your question, please ensure that your questions are clear, concise, and communicated in a respectful and professional tone. This will help us to keep the session productive and focused. Now onto our agenda today. So we have 4 exciting topics to get into together, beginning with some updates related to important reporting dates and impacts. Next, we'll spend some time talking about the reporting of actual base fee revenue and where there may have been extenuating circumstances that we'll be considering through your reconciliation. Thirdly, we'll dive into a new approach to 2025 recoveries so that we can support you in the best way possible with your cash flow management this year. And last but not least, we'll provide an overview of what to expect during the reconciliation of your 2025 CWELCC funding. And of course, with the remaining time that we have, we'll try our best to answer as many of your questions as possible. So let's get into it. So today we're going to start by talking about a few key changes to the FAIR template. So on this slide, we have a helpful table which really outlines the scope of changes. Now, the scope of changes really do depend upon who your overseeing service system manager is. So as in years past, the FAIR is a helpful financial reporting tool. The intention is to break down the details that are provided within your audited financial statements. So if you're on the call today and Peel is your overseeing service system manager, new for you this year, the scope of the FAIR template has been expanded to integrate all of the reporting requirements for 2025 CWELCC and the ministry's standardized financial reporting template. As a result, you will notice a few more tabs in your version of the FAIR, such as the allocation and operating plan, Peel region grants, and key performance indicators. So if your head office is in Peel, you'll just need to fill out these tabs for all of your operations in Peel, but also in each jurisdiction that you operate within. So we want the full picture if that is your operating reality. So yes, if you take a look at a glance, the FAIR is bigger, it is bolder this year, but ultimately it's designed so that we can cut down on the sheer number of templates that you need to fill out and also avoid the need for duplicate reporting. If you're on the call today and Peel is your secondary service system manager, you do still need to submit a fare, but your version of the fare, you can just continue to fill that out with the information about the homes that are in Peel only. Depending on your operating reality, the team should have already been in touch with you and developed a unique version of the FAIR template to support you with your reporting requirements this year. Moving on to the next slide, as with any new template or change, we do want to ensure that you are supported through the process. So on this slide, I'm just going to highlight a couple of important reminders, beginning with the audited financial statements, such as the new requirement to add note disclosures within your audited financial statements. We will also need a consolidated statement of revenue and expenses for homes in Peel only. So if you operate in multiple jurisdictions, once again, that consolidated statement of revenue and expenses should only break down the expenses for homes in Peel. And of course, as you conduct your audited statements, if applicable, please make sure that any management letters that are issued by your auditor are also included in your submission. Moving over to the FAIR template, you do want to ensure that you fill out each tab going left to right, ensuring that all of the green highlighted cells are completed. Now, once you've filled in all of your information, it is always a good idea to review your details. So some of the things to look out for, ensure that your financial position is balanced. You do want to double check that the total revenue, expenses, assets, liabilities, loss, or surplus match the amounts that are within your audited financial statements. And, one of the questions this year that we've heard, a number of kind of questions or clarification that's needed is with respect to the proration methodology. And that applies for those of us who are serving children ages 0 to 12. So when you are filling out your fare, if that applies to you, please do give some special attention to that proration methodology. And of course, you can ask some questions to us if you need some support in determining what that appropriate proration methodology should be. Last but not least, if Peel is your overseeing service system manager, within your version of the FAIR template, there is a final tab, A8, which should provide you with the amount that you can enter into GovGrants. I'll actually walk us through an example of that very shortly. For those of you who operate in Peel but have a different overseeing service system manager, after completing the FAIR template, you can enter your expenses as fully spent in GovGrants. And then from there, we will work with your overseeing service system manager as they complete your reconciliation. So let me just pause for a moment, take a bit of a breath, because that was a lot of information. The good news for you, if you're feeling like this is a bit of information overload, is that if you need a full list of your reporting requirements for your operational reality, we have developed a number of very helpful tools in addition to the service provider handbook. So new this year, we do have Peel Region's accounting and note disclosure guideline, and that is designed so that you can share that with your auditor and your bookkeeper, and it's just going to help them with understanding all of the requirements as they are preparing your audited financial statements. We have a separate guideline which is designed to walk you through how to fill out your version of the FAIR template. And we've also developed some very helpful videos which we've posted online on YouTube with step-by-step instructions for whoever it is that's filling out the FAIR on behalf of your agency. So depending on where your overseeing SSM is, we do have a version of these guidelines as well as videos. And these are really designed to just support you and your accountants with your submissions. But of course, if at any point during the process you do have any specific questions, we encourage you to reach out so that we can just best support you as you're preparing for your reporting this year. Moving on to the next slide, I'd like to walk through a quick illustration of how the FAIR template simplifies your reporting in GovGrants. Now, please note that this example only applies if your head office is in Peel and we are your overseeing service system manager. So for those of you where that's true, this table can be found on tab A8 of your version of the FAIR template. For illustration purposes, because I know this is a lot of numbers, I'd like you to just focus on the single cell that is highlighted in yellow. So after you've completed the entry of all of your data into the FAIR, the template automatically calculates your actual program cost, which is the total amount of expenses for this period. In this example on the screen, that total amount for this agency is $340,500. Now, I want you to just fix that number in your mind as we transition to the next slide. And on this next slide, what you will want to do in GovGrants is you can take this total amount, and when you're performing your reconciliation in GovGrants, give attention to that little pencil icon at the bottom right, which is highlighted with the red box. You can click on this pencil icon and report that same amount, $340,500, as spent this period for the actual program cost category. You do not need to report your expenses under any other line. As said previously, this is for those of you who have a head office in Peel, and this is again designed to simplify what is reported in GovGrants. If you're on the call today and Peel is your secondary service system manager, once again, you can report the actual program cost as fully spent within GovGrants. We will be connecting with your overseeing service system manager as they progress with your reconciliation. We're working right now with our developers for the GovGrants platform to just simplify so that what you see on the screen is what the reality is when you're entering in those amounts. And that is just to help to reduce the confusion by having your expenses reported on just that one line, actual program cost. So hopefully this is a helpful illustration for how that FAIR template is designed to simplify your GovGrants reporting for this year. Moving on to the next slide, I'd like to next take a moment to talk about the importance of the reporting deadline for your 2025 CWELCC reconciliation. So that's related to your audited financial statements and your FAIR. So we've heard a number of questions from some licensees in just concerns with meeting this deadline and questions related to why there's just this increased amount of urgency this year. So I'd like to speak a little bit about that. If you've operated in Peel for some time, hopefully this April 30th date is growing more and more familiar. We typically do require audited financial statements 4 months after your fiscal year end. And of course, we've just established that as a requirement for those of you with a head office in Peel to have a December year end. What is new this year is not necessarily the date that these documents are due, but it's an increased amount of pressure that we've been receiving from the ministry, namely to submit standardized financial reporting data by their deadline of June the 1st. So we've reached out to the ministry, just understanding that many licensees do have a difficult time finding auditors during that time and requesting some flexibility. Unfortunately, they've remained quite firm with this deadline. So that's a little bit of context for you. Coupled with that is really our intention to be responsive to some of the feedback that we heard from the sector this past year related to how adjustments to allocations that take place late in the year make things challenging for a number of licensees, so that as you're budgeting to your bottom line, as we've been encouraging you to do, those late year adjustments in some cases even contributed to some financial viability concerns last year for some providers and agencies. So we definitely do want to improve upon this year. And this is yet another important reason why that timely and accurate reporting is so needed. The sooner that we can receive that reporting information, the faster we can commence with the work of reconciling your funding, which is of course a necessary step before we can finalize allocations. Moving on to the next slide, given some of these timelines, we have tried to work very proactively with the sector this year to communicate some of the impacts for late or incomplete submissions. Now, these items have already been shared through a communication that went out to the sector, as well as through your individual EYS. But I will just take a quick moment to underscore some of them for us here today. So in order to be eligible to apply for one-time emergency funding, you do need to submit your audited financial statement and FAIR on or before April the 30th. That's the deadline date. If you are late, we will of course still receive your submission. However, you will remain ineligible for one-time emergency funding in 2026. As per our compliance policy, which is in our service provider handbook, if that lateness does persist for 60 days or more, there will be a hold that's placed upon a licensee's CWELCC funding until that complete submission has been received. So these actions, although they're not new, because they have been part of our compliance policy and service agreement for some time, I do want to note, in the past, we have, of course, always tried to show flexibility where we are able to. As I shared on the previous slide, this year, we are just kind of caught in the middle a little bit, where we do want to support the sector proactively with meeting that date and providing the resources to support you with that. However, we have very little flexibility in terms of the reporting requirements that we're being held to by the province. So that's just a little bit of context for you. So we really do need to work together this year. We do need your support in submitting all of your reporting documents in a timely way so that we can meet our ministry requirements. But the other side of it is also that we want to avoid any delays in processing your CWELCC rolling top-up. So this is an important point for any agencies with a head office in Peel that were in receipt of 2025 legacy and/or growth top-up funding. It's important to note that your approved reconciliation data is needed so that we can calculate your rolling top-up allocation update, because that rolling top-up factors in the total 2025 eligible expenses. So depending on what it is that you report and what it is that's reviewed and approved through reconciliation, this may actually have results in a change, whether it's an increase or a decrease in how much CWELCC funding you receive. So my encouragement to you is, please take the time, if you haven't, engage with your auditors, make use of the tools and the materials that are available. And of course, if there's some way that we can support through the process, reach out, because we are happy to really just ensure that you have the information that you need to be set up for success. Moving on to the next slide, I do want to now talk a little bit about the reporting of your actual base fee revenue this year. So on this slide, this may be familiar to those of you who attended our teleconference in November of last year. We use this slide to really provide a reminder and explain how the cost-based funding formula calculates the maximum amount of eligible costs that will be covered. So that is known as your program cost allocation, which is comprised of that base fee revenue plus your CWELCC funding. And so for 2025, the funding formula calculated your expected base fee revenue, which is the estimated amount of base fee revenue using your reported enrollment and service days for each home. We understand, and we've been in communication with many agencies on the call today. We understand that the operating reality for LHCCs, it does contain some nuances related to fluctuations in enrollment, and these are things that make it really difficult to pinpoint your actual revenue. So you may recall that in order to support the sector, in the fall of 2025, our funding modeling team did reach out to ask agencies to share their projected base fee revenue so that we could update your expected base fee revenue offset. That was designed to really support you, understanding just some of those challenges with pinpointing those fluctuations in enrollment. So now we've arrived at that time for reconciliation, and as part of the FAIR template, you'll be asked to report the actual base fee revenue that you collected. So as we can see here on this slide, if you collected more base fee revenue than expected, your CWELCC funding is reduced, and this amount is considered as an overpayment and recovered. If you collected less base fee revenue than expected, your expected base fee revenue offset remains in place, and that difference is considered as a loss. Now, in that second scenario, once again, there might be cases this year where, despite that reach out that we had in the fall to update based on projected base fee revenue, we understand that there could be also some extenuating circumstances which may have contributed to a lower actual base fee revenue collected. So on the next slide, I do want to walk through the process that we'll be taking this year as we look at 2025 reconciliations. So the ministry has allowed service system managers some limited discretion in situations where the actual base fee revenue is less than what was expected. So let me just say, before I launch into some of the details on this slide, once again, this is the first year of the CWELCC cost-based funding model. It has certainly been a year that's full of lessons. I think, yes, for everyone on the call, myself included. And so we understand that there may be a need, especially in light of some of those unique operating realities for LHCCs or any other extenuating circumstances that took place last year, where we do need to consider where we as service system managers can exercise some of that flexibility. So I'll describe for you right now the proactive approach that Peel is going to take through reconciliation. And this applies to those agencies with a head office in Peel. So during the reconciliation, we will begin by reviewing the actual base fee revenue that's reported so that we can identify any home childcare agencies who collected less base fee revenue than their projected offset. Secondly, we'll also be assessing how much potential recovery of cost-based funding is available. And from there, once we've identified those who have collected less base fee revenue than expected, we'll be reaching out to those agencies to request some additional information to really understand what were those specific circumstances that may have taken place in 2025, as well as the scope of that financial impact. Let me also just say that I know that the last thing that anybody wants to hear is the idea of additional reporting. But once again, in order for us to exercise any type of flexibility, we really do actually need this information so that we can assess. I mean, was that actual base fee revenue just a normal operating variance, or, what types of extenuating circumstances could have taken place? Once we've received that information and reviewed it, where it's warranted, Peel Region may offer some support in the form of reducing that overall recovery amount. We'll also be assessing on a case-by-case basis those types of situations, if they exist, where the operating variance is greater than the available recovery amount. So our goal through this process is, first of all, so that we can better understand the specific operating circumstances for LHCCs under this cost-based funding model, alongside with any key themes that we can incorporate into a clear policy that we can come out to the rest of the sector with in 2026 and moving forward. So overall, I hope this is some welcome news. I just say that we don't always get things completely right, but in the places where we are able to show flexibility, we do want to try our best to be mindful of the operating reality and how to best support the sector. And then on the other side, there are, of course, some situations where we have very limited or no flexibility, such as what I was talking about with the deadlines. And it's in those places that we do have to, try to be firmer with deadlines and expectations. But overall, in terms of your actual base fee revenue, we're hoping that, we are able to support the sector through this approach that we'll be taking. So moving on to the next slide, I am pleased to say that the team is always looking for opportunities for continuous improvement. And so with respect to the reconciliation and recovery process, we have heard some feedback from the sector over the years. And so I do want to just highlight 3 themes that we have heard a number of times, and then talk about how we're looking to address this in 2025 reconciliation. So first of all, we have heard that cash flow issues are sometimes an operating reality. And this could be contributed to as it relates to the timing of when recoveries from prior year are triggered. So some agencies have experienced additional cash flow challenges, especially in the final quarter of the year due to unplanned recoveries. Secondly, we continue to work with agencies to support you with your budgeting and your planning. And what we have heard loud and clear is that earlier notification is, a lifesaver. Earlier notification about recoveries and allocation changes, any of those things that are communicated well in advance really support you in terms of your overall budgeting. And lastly, we've heard that timeliness of review is always something that we should be striving for. And that makes total sense. While that previous year is still fresh in your mind, it is, of course, best to ask those questions related to your expenses, because that really does help ease some of that administrative burden. So I appreciate all of that feedback from the sector. And on the next slide, I do want to talk about something we're implementing this year, which hopefully is a step in the right direction. I'm going to refer to this as our initial settlement and recovery approach. So the accountants on the team have explained this to me as a process that is, very similar to one you might be familiar with from, the federal government when you're processing your income taxes. So as you know, April 30th is that deadline to submit your audited financial statements in FAIR, as well as that total expenditure amount in GovGrants. And what Peel Region would do under this new approach is we would verify that that total expenditure amount and in your audited financial statement, FAIR and GovGrants match. And then that box in orange, if applicable, I previously just talked about that approach where if your actual base fee revenue is less than what was expected, we will be identifying those agencies at that time to ask for some additional information. Now, from there, we would take the information that you have reported in your FAIR and audited financial statements, and we would approve those amounts in GovGrants to provide you with that initial settlement. Then, as usual, we would commence with our reconciliation review for the entire sector. And during that reconciliation review, there could be some instances where we do need to reach out to ask some questions about particular expenses. Depending on your operating reality, this step might also include some reach out to neighboring service system managers where you operate so that we can share or obtain details. After that reconciliation is wrapped up, if it's determined that there was an expense that was reported in error, or maybe it was determined to be ineligible, there could be a further adjustment. But the key benefit here through this initial settlement approach is really realized through that initial settlement bubble. It provides you with an aspect of predictability. So by providing that initial settlement ahead of that full reconciliation review, you can better budget and plan for those recovery amounts. And it also helps to prevent those financial shocks in the last quarter of the year. If we really wait until the reconciliation review is done, because then you might expect an accumulation of large or unexpected recovery amounts. It might be helpful to walk through a quick illustration of how this initial settlement process would work. So let's take a look at that in the next slide. So again, this would only apply to those agencies where Peel is your overseeing service system manager. So in this example, this agency operates with active homes in both Peel and York. If you look at the column in blue, at year end, this agency reported the following actuals as part of their reconciliation, which resulted in an initial settlement amount of $31,200. So the column in purple really just breaks down those amounts. So $20,000 in surplus in program cost allocation. Again, anything that was not spent is recovered. This agency also collected $10,000 more in actual base fee revenue. Of course, that amount is above the expected amount, and so it is recovered. And then there is a corresponding adjustment of $1,200 to their amount in lieu of profit and surplus, since that is calculated based on the actual program costs. So once again, the benefit of triggering this initial settlement based on what was reported and validated by your auditors is that as early as June, this recovery of $31,200 can be budgeted and planned for. Then, as the reconciliation work is underway for this agency, following with the example, it was determined at the conclusion of that reconciliation that there is a further $1,000 in recovery that's necessary. And this further recovery, plus the adjustment of the amounts in lieu of profit and surplus, is then triggered. But once again, through this initial settlement process, we've really aimed to reduce the risk of a financial shock coming at the end of the year by putting off all of those recovery amounts until the reconciliation is completed. So hopefully that example is helpful for you. Again, where Peel is your secondary service system manager, the process for you is slightly simpler. You can simply report in GovGrants that amount as fully spent. And then, of course, reconciliation is led by your overseeing service system manager. So let's move forward into one of our last topics. And that is just an overview of the 2025 CWELCC reconciliation process for agencies with a head office in Peel. So it's important to note as we launch into the slide that the ministry has given direction that it is the overseeing service system manager who will lead the reconciliation process for a given agency. So in cases where we are your secondary service system manager, you can direct your questions about how reconciliation will work to your overseeing service system manager. We've asked you to simply report what you've received from Peel in GovGrants as fully spent. And then if there are corresponding adjustments or work through the reconciliation process, we will be following the lead from your overseeing service system manager. Now, for everyone else, the purpose of this reconciliation review is really to ensure that the expenses that were reported meet the eligibility criteria for cost-based funding. So this year, the reconciliation will be completed by either a region appeal staff, which is the typical process, or it will be completed by one of 3 independent accounting firms. Regardless of which of these 2 approaches is selected for your agency, the end result is the same, ensuring that costs meet the eligibility criteria of being attributable, appropriate, and reasonable. And along those lines, of the 3 eligibility criteria, the one area where we often receive the most questions is on that topic of reasonability. So when we are assessing reasonability in this first year of cost-based funding, our objective is really to try to leverage data so that we can have a consistent process and an equitable approach to our assessment. So to give you a bit of information, as a starting point, we plan to leverage current and prior year expense data and objective measures such as the Consumer Price Index so that we can develop some comparable sector benchmarks for agencies of a similar size. Now, in the first year, the data is not going to be perfect. And so as part of this process, we will likely involve the need to have a conversation with you so that we can obtain some clarity and some context. We are committed to be working with you through this process. So we won't be changing things without actually connecting in with you to really understand, because just because the expense is higher than the sector average, it doesn't necessarily mean that it's ineligible. In many cases, under this cost-based funding model, that context is really important. And so we do really want to work with you through this process. So if we can go into the next slide, I'll just break down some of the details about how the reconciliation review will go if it is conducted by Region of Peel staff. So majority of agencies, if your head office is in Peel, this is the process that will follow. Okay, so we will review your reconciliations. through one of our Region of Peel POSA team members. So to cut down on the number of questions and back and forth, we'll try our best to leverage data that is already on hand to really better understand your expenses. So this could include some of your operational data for 2025. It could be your operating capacity or your monthly enrollment. We know that salaries is a significant component of your budget, so we'll try to leverage the workforce supplementary schedule data as well. And as mentioned previously, we plan to also work closely with our service system manager partners in other jurisdictions so that we can really minimize that administrative burden upon you. Then, of course, if clarification is needed, we'll reach out by email with some questions about your reconciliation report. The goal here is not to trip you up or to make this a long and drawn out process. We will reach out with some questions, and based on the information provided from you, we'll need to make a determination about whether an expense is eligible or ineligible. And this is really where that supporting documentation benefits you. So if you have that information that's readily available, it really should support in moving these conversations forward. Going to the next slide, we are currently working with our 3 third-party vendors so that we can ensure that there is some consistency in their approach to reconciliation reviews. Now, some folks on the line, it might be a bit nerve-wracking, the idea to have an independent auditing company coming to complete your reconciliation this year. So I do want to say just a couple of brief words to familiarize you with the process. So the type of review that these independent auditors will be conducting is called a direct engagement to report on compliance. So in plain terms, it's essentially an independent review of whether an organization has followed a specific set of rules and funding requirements. So that review involves looking at what was reported, supporting documentation, and then providing an opinion of whether the organization complied with the requirements or not. So from an operational standpoint, it is actually very similar to the reconciliation and eligibility work that is done by the POSAs each year. And part of the reason why we are going down this route as well is because the ministry has directed all service system managers to conduct these reviews through a third party for 5% of the CWELCC centers and agencies within their jurisdiction. And what that breaks down to for Peel, just for transparency's sake, it really breaks down to about 11 licensees. So when we're determining who is selected to undergo the direct engagement to report on compliance, some of the factors that we look into are risk-based in nature. So part of our determination could involve those licensees that maybe have previous issues with non-compliance or viability concerns. But that's not the only criteria. We also really do look toward equity. And so we consider a diverse sample, those who might have a different size, auspice, whether they're LHCC or center-based, single site, multi-site. We really do want to ensure that there's equity across the sector. And so in addition to those, we really want to get a rotation going. And we'll also incorporate some of those who may not have been chosen for these types of reviews before in the past. Again, it's to try to ensure some equity in how it is that we're selecting folks to be undergoing these reviews as well. So again, we'll be working with these vendors to ensure that their process is consistent and streamlined wherever possible. And if you are selected for a direct engagement, our plan is to notify you in the month of May with the goal of having that review wrapped up before the end of July. So that just gives you a little bit of information about how that will work. Okay. So let's move forward to the next slide. We have covered a lot of ground, and in closing, I promise I have saved my favorite slide for last because this is the opportunity that I do get to really just celebrate some of the incredible work from the team. And we are all here committed to partnering with you and supporting you. And so since last year, the team has been working continually. Really listening to feedback and thinking about where are the areas that we can best support agencies such as yourselves. So I know that even on the call today, we have some of our wonderful like EYS team, and if you like, there's like an emoji button. You can send some hearts as well if you appreciate the folks who really work with you and support you. We have a wonderful team of early year specialists, really. And in addition to the incredible work that they do this year, we are repositioning some of the roles of our senior program and financial analysts so that they can partner with the EYS team to provide some front-facing financial support to each of the agencies in the sector. And that's really to help you on an ongoing basis so that you have more of a dedicated or familiar face when you do have questions or need support of a financial nature. So we're really excited about that. Also, coming very soon, we have a new and improved 2026 operating budget template, and it's going to include some great new features to better help you to track 6 to 12 funding. That's some feedback we heard last year. And of course, it has a really clever built-in repayment calculator to help you plan your year-end position. Last but not least, in the coming week, or actually, I believe the email went out today, the team is sending some invites for an optional CWELCC reconciliation drop-in session. So this is just a great opportunity. If you have any questions or maybe you just want to join so that you can listen and learn, this session is going to be structured in a way to maximize that amount of time for you to bring your questions and receive guidance related to your 2025 CWELCC reporting. So you're welcome, of course, to extend that invitation to your accountants and bookkeepers, and it's really designed to just support you in the best way possible. So moving on to the last slide, there's really just two other items that I would highlight. There is an update task on staffing and wages that you can expect to receive after the long weekend, so stay tuned for that. And you'll also want to stay tuned for our next teleconference, which is scheduled for the month of May. And that teleconference, you're not going to want to miss it. We'll be sharing some more details about your 2026 allocation, namely the way that the rolling top-up allocation is going to work. So please stay tuned for that as well. And that's the presentation for today. So with the remaining time that we have, we do want to just open up in case if there's any questions from you, and happy to once again support with addressing as many of those as possible. So I'm not sure if Sonia's on the line, but Sonia.
I am.
Hi.
I am here. Hi. I am here. It doesn't look like there is anything in the